What's going on, everybody? Welcome back to another trade recap video. Today we're going to be running down through this trade that I took on the 25th of the 9th 2025. So without further ado, let's get right into the video. Now this trade that I took is the ICT silver bullet model. I just want to mention, guys, that you always want to have your time on the bottom right here toggled to New York. So you have to and must have your time on TradingView set to New York in order to have all this make sense, because everything that I'm going to be talking about today is going to be time and price related. So you need to know when to execute. There's a certain time period, intervals where you would want to be entering your trade, and so on and so forth. So it's very important to have that New York time set onto your trading view. So the first thing that I'm going to be looking for before even trying to execute a trade is a sweep of liquidity, whether that being Asia highs or London highs, or Asia lows or London lows, or even previous day high or previous day low. Now, the previous session highs and lows are more of a efficient and a better liquidity sweep to grab rather than grabbing an old buy side or sell side liquidity level, just because it's more probable that price will react off those levels much more than they will be reacting off a random previous buy side or sell side liquidity level. Having said that, that doesn't mean we neglect all the previous buy side or sell side liquidity levels. I'm just saying that other previous session highs or lows are much more probable to play out in our favor once we come and sweep them. So as we can see right here, we do have London lows marked out at around 7:45 a.m. right before pre-market open at 8:30 New York time. And as we can see, we absolutely come and sweep them. Also, previous to that, we did sweep previous day low in London session. So again, that indicates that we are now trying to go for a long. The reason being is because price moves from liquidity to liquidity. That's how price simply moves. Now dropping down to the 1 minute time frame, we see more clearly that price actually swept London lows at around 8:35 a.m. again in that pre-market open New York time. Now we also drop down more and more when market opens at 9:30. Now obviously right now I'm going to be looking for a long, and in order for me to look for a long, I need a swing high to be created. So if we run the clip right here and see where we get that swing high, we get a swing high formed right here at 9:55, which is now inside of the macro, and our macro is from 9:45 to 10:15. That is going to be considered the first AM macro. And now the second AM macro is going to be considered from 10:45 all the way to 11:15. So these are two 30-minute intervals where price is more likely to run to a specific target or a specific price level in the markets every single day. Now, some days price will just consolidate due to, for example, news, Trump speaking, Powell speaking, FOMC in the afternoon session, and so on and so forth. But most likely price in those macro sessions tends to go and take out key price levels in the market. All right, so back to what I was saying, after we get that swing high right here at 9:55, and just to dig deeper, a swing high is essentially a 3-candle pattern, where if we zoom in right here, we see this candle here, number 1 we'll call it, this candle here, number 2, and this candle here, number 3 we'll call. The number 2 candle's high is the highest of both 1, 2, and 3. So that is just essentially called a swing high, okay? So following that swing high, I'm going to be wanting to look for a market structure shift to occur and a displacement with that market structure shift. And if we play the bars right here, bang, we do get this market structure shift right there at 10:01. And essentially what a market structure shift is, it's this candle right here where it breaks and closes above. If we zoom in right here, it closes above this swing high right here. Okay, so that is essentially just called a market structure shift and a displacement to the upside. And why is it also called a displacement? Because it is a strong closure above that swing high right here with a demanding force to the upside. Now, this just technically indicates to me that price is willing to seek higher prices. Now, following that market structure shift and displacement to the upside, we are going to be essentially looking for a fair value gap. And why we're going to be looking for a fair value gap is because that fair value gap is going to be actually our entry point. And no, not exactly our fair value gap, but a retracement into the edge of that fair value gap. But as we can see right here, this displacement candle has formed and we do get a fair value gap right here. And again, just to dig deeper, a fair value gap is a 3-candle pattern once more. Let's call this candle right here number 1, this candle right here number 2, and this candle right here number 3. Essentially what a fair value gap is, number 1's candles high and number 3 candles low are not overlapping, you see, and there is an inefficiency. That is just essentially called a fair value gap. There is a price gap. Now, after getting that fair value gap, what I'm looking for and waiting for now is a retracement into that fair value gap. I'm just waiting pretty much for price to come back and tap into this fair value gap right here in order for me to go long. As soon as price touches that fair value gap, I'm going to go long. So let's play the bars right here and we'll see, bang, we do get a retracement right there at 10.03, which is one, inside of the first AM macro, and two, it retraces into that fair value gap that was formed at 10.01. And something that I do want to mention to you guys is that we absolutely have to execute as soon as price retraces into the edge of that fair value gap and not wait till price comes and retraces back to the middle of the fair value gap, which is also called the constant encouragement or the bottom end of the fair value gap. And the reason being, as you can see in this scenario right here, price actually retraces just below the edge of the fair value gap and continues to run up, not looking back. So it's very important to execute as soon as price touches into that fair value. Now that we're in the trade, I want to place our stop loss. Our stop loss is going to be going below this displacement candle's low, as that is an absolute valid stop loss to have in these sorts of trades, as we do get a massive displacement to the upside. Now, I do usually say you want to place your stop loss below a swing low, but in this scenario, if we do want to place our stop loss below the swing low today, we'll be risking 52 handles, which is way too many handles to risk. Our max risk per trade is going to be 30 handles or less. No more than 30 handles each trade we take. Now for our take profit point, we're going to be targeting all these low resistance liquidity levels right here. And simply what a low resistance liquidity level is, we do have a high here and a high there, high here, high there, high here. All these are low resistance liquidity where price would most likely want to come take out all of these at once, as they're all stacked up on each other. So again, that is a very valid place to take your profits right over here. Now, I do want to mention to you guys that if you look very closely, actually my entry is not absolutely to the edge of that fair value gap. And the reason being is because I wanted to make sure that my entry must have a maximum stop loss limit of 30 handles below this displacement candle's low. So I would measure out my stop loss and I would see where my entry has to be. Okay, so if I had my entry right here, I would be risking 32.5 handles. I don't want that. I just want to be risking 30 handles. So I'd simply drag this down and see where my entry is going to be. And I'll place my order there. And then when price comes and fills me, I'm only risking 30 handles if price tends to come on the other way against me. Now, if we play price, we see that price shoots up, a little bit of a retracement, and bang, we hit take profit for 104 handles on the day. 123.47 risk to reward, as we can see right here. Now, this is considered to be an A+ setup. We get all the components we need to execute the trade, and pretty much all the stars aligned in order for us to execute this trade perfectly. And there you have it, guys. The ICT silver bullet model. Very simple, very straightforward. Nothing complicated about it. All you got to do in order to win in the markets is just stay disciplined, stay patient, and follow one system, one strategy. Now, if you guys do have any questions, let me know in the comments down below, and I'll be sure to answer you guys within the next 24 hours or less. Also, guys, if you wish to join the VIP top trading floor, every single day I share with you guys my executions in the VIP top trading floor Discord only. If you guys do wish to join, the link will be in the description down below. Also, guys, I'm opening up a few spots for my one-on-one mentorship. Again, if you guys are willing and are serious about changing your life in your trading journey, the link will be in the description down below for that as well. Apply, see how you go. If you do get accepted, I will accept you and I'll talk soon to you guys. But having said that, thank you guys so much for watching. I love and appreciate each one of you guys. Thank you so much for the support. Subscribe, like, comment, and I'll see you in the next one. Peace.